Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to work our way through the dollar yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go. And if you need help with anything, check out finding-value.com. Still have that discount coupon code LEAP going on. Look at the description link if you want to see details on it. And we have a 5 p.m. Sunday Mountain Standard Time question and answer session coming up for the website. Let's dive in. Let's see what's going on today. So the dollar, it's weaker today, but it looks like we could potentially be trying to put in some sort of maybe a short-term bottom. Momentum still to the downside. So we're definitely getting a weaker dollar. And yields have been falling as well on the shorter end of the curve. So weaker dollar in the short term. We've got the 2-year yield that has fallen. It's down about 0.5%. Are we going to get a potential bottom? I don't think, tough to say. This candlestick here is not a decisive candlestick saying that we've for surely bottomed. There's potential. You can see that we gapped lower in the morning and then it came back up throughout the day. So it's got potential, but I'm not stating that we're going to see a bottom yet. Momentum is still to the downside. The 10-year yield looks a little bit more bottomy, like it's trying to put in at least a short-term bottom. And we'll see what the candlesticks are next week and how they trade. The momentum to the downside, and we'll see if we can get any sort of strength here. And then the TYX has got a little bit more strength, but again, the momentum still to the downside. And a lot of the times when you get these small up candlesticks like these here, they're generally continuation patterns. So I think we could still go lower, probably across the board is my guess, in the short term. TYX TNX ratio, this is a ratio that I follow because it closely links the movements of gold. And just in general, when you're real low like this is generally a good spot to be looking at gold this entire time. And when this curve uninverts, when the 10-year goes down further than the 30-year, which today we had that a little bit, gold generally does very well. So we had it go up today. It's not a very convincing candlestick day, and we do have a broken down trend line here. Oh, goodness, what a horrible draw. We do have a channel that's broken to the upside, and it does look like it wants to continue higher. The uninversion of the yield curve. That should help gold. Now, that doesn't mean that we're just going to go straight up. It means that we're going to grind most likely higher, and I don't know the path that this will necessarily take. I don't know if it's going to do something like this, or if it does like this, or if it does some big move. I highly doubt it's going to go that fast, but you can see other ones where it kind of goes slow in the beginning and then accelerates for a period of it. And this is generally a problem when it accelerates. Whenever you see these big, large accelerations in it, that's generally where problems occur in the markets, potential crashes, or people get scared, something on the lines of that. It's basically the 10-year falling is what causes this. TLT still looking good. We got a slight down day today, but it still looks good to move on up based off the candlesticks, and we're right on support. We've got the 2 and 10-year yield curve uninverting a little bit, which also will help gold, but it's not in a decisive trend at this. It's not decisively going down. We're still in an upward channel where, I mean, I don't even have to like draw this anymore. You can just look at it here. That's basically your upward channel. Gold up almost $20 an ounce, 19.5. Big move. Now we do have a wick at the top. We could see maybe a little bit of selling pressure, a little bit of a pullback. We'll see what that pullback looks like if we get one. But so far, momentum's up the upside. Silver, it's right underneath its basic, resistance, right above us. And this is one to watch, guys. This is really one to watch to see for this breakout. That is what you want to watch. If we can get a breakout here, I'm going to be a very big silver bull. I already am. What am I saying? I'm massively bullish on silver, and I think this is just a matter of time. We have an inverted yield curve. The market's going to try to lower rates at some point. It'll uninvert and it's going to light up gold, which gold is already in motion, and silver's going to follow its footsteps eventually. Matter of time. Platinum down a little bit. It still looks good. We've got a downtrend line break, and basically this is your consolidation period, and then I think we're just like an accumulation zone almost that's ready to rip. So I think platinum's looking really good. Palladium's also trying to bottom. We've got a inverted shoulder, head shoulder bottoming pattern, broken the neckline, and we've got two little down candlesticks above the big green army, as I call it. This is just more or less a bloody nose, little profit taking days, and the momentum has shifted, in my opinion, to the upside. We're right up above long-term support on it. Now, that doesn't mean that it will automatically just rip, but you might work your way on up and stair step higher. XE to gold ratio, it is down a little bit. Maybe we get a retest move before heading higher. It's possible. Again, I don't know the path, and this is a bearish engulfing here and here, but I'm hoping that that occurs and we can get a really good buying point for gold mining companies. This ratio is incredibly cheap compared to history, and we still have not broken the downtrend line. This big downtrend line that we haven't broken yet. And believe me, guys, I want it to break too. Hasn't broken down. It hasn't broken to the upside yet. CRB index. I know oil was a little bit weak today. So we had a little bit of a down candlestick today. Maybe we have a little bit further downside. We'll see. But undeniably, the momentum's to the upside, and we'll see if we can keep that momentum up. Bigger picture view, everything's looking good. Here's your first wave, most likely, and I think we could still be in the second wave. It is possible. There is a possibility that it could dive like that with a slowdown in the market, and the yield curve could uninvert. That is a possibility. We've got CRB index versus the S&P 500. Not much movement in either direction for this whole section there, so it's just moving sideways. We've got GDX slightly higher, but basically a sideways move in all of the mining companies. Backing out, we're still in these patterns here. So we've got these flag patterns. They're big flag pattern there, and we're in the middle of this flag pattern. GDXJ is in a declining. I don't know why that's. Do it on a different time frame or something. We're right underneath it. We have a good chance of breaking out soon. Great. And then SILJ is also right underneath its trend line. We have a good chance of breaking out if silver can get its BUTT moving. Dang right. Switching to crude oil. Crude oil is down today, 1.3%. We're right on that resistance support level. There is something here. It's a bearish engulfing. We've got one here. Then we've struggled to come back up. We have another bearish piercing here and another bearish engulfing that showed up today. And, is there going to be a slowdown in this market where crude oil could potentially move to the downside? That is a possibility where this thing squeezes into the corner there and breaks to the downside. And we might get a pullback for a little while. Maybe we come back here or something like that. So that is a possibility, and that's kind of what I'm seeing in the short term. We have conflicting data here. So we're on support, which is right where we're at, and then we have a bearish candlestick that's going to try to break through that support. So the possibility of a break is there, but it hasn't broken yet. TTF gas up 2.5%. This is actually looking pretty constructive. It looks good, like we're going to try to work our way on up. We've got natural gas, Henry Hub down a little bit, down about 1%. They're pulling back on rigs. Production's going to fall, and I foresee us being down here probably for at least a few months. XOP, yeah, you know me. We do have some bearish candlesticks that are out here. One there, one here, kind of. We're not really getting too much upward traction. I'm not saying that this is necessarily a bearish setup, but if oil does pull back, we very well could pull back with oil and XOP. And if there's a slower market sell-off or something like that, or slowdown in the overall market, maybe we pull back and loop back around again. Very much a possibility. Shoulder, head, shoulder, and the neckline that we haven't broken yet. We have resistance overhead. We do have a little bit of market weakness, like oil and some of these other stock areas are getting a little bit weak. OIH down 0.5%. And XOP, I mean, I have to give it credit though. XOP was up 0.5% and OIH is only down 0.5% in the face of oil being down 1.33%. So that is strength in the face of oil weakness. We've broken out to the upside here, and that still looks good. There's no reversal candlestick or anything like that. It still looks good to go higher. So, but we'll see what oil does. We'll see if that support level holds. We'll see how money flows go into OIH and XOP. That's what we're going to have to wait and see. But it still looks good to go up. Crop Physical Uranium Trust, a little bit more selling pressure today across the board here. A lot of people are saying this is probably some sort of flag pattern, and I would agree. It does look like a flag pattern where we could go lower in a lot of these setups. So the momentum's still to the downside, kind of a weaker candlestick today. And again, we'll see if we get follow through to the downside. URA down 4.4%. This is not a good looking chart, guys. This is your flag pattern here. We've got a bearish engulfing pattern that showed up today. It was looking good yesterday, but we continue to get these bearish candlesticks. There's one here, one here, one here. And the buyers and sellers are dueling this back and forth. But if I were to make a guess, and this is just a total guess, I do think that we could see more downside out of URA and probably in the other ETFs. And I do think that this is probably a flag patterns generally. So a bullish flag pattern goes up, then angles downward. A bearish flag pattern goes like this and it angles upward. And that's further evidence of the angling upwards here, where we're probably in a bearish formation where we could potentially head lower with this bearish engulfing that showed up today. That's what I'm basing it off of. Uranium down 5.2%. It's right underneath resistance. And again, I'm looking at this flag pattern that is being developed with a bearish engulfing. So we could see this break lower. It's still a high possibility. URNJ's got the same type of pattern, which is basically already broken its flag to the downside. There's your breakout. So we'll see if there's follow through to the downside. Now, if we were to project this move, it would look something like this, and then you project it like this where the breakout is. So that could go and pull back quite a bit. It could pull back quite a bit. It is a potential possibility. TAN up 1.78%. It's still holding on with weaker yields, weaker dollar. We've got copper also selling off right at support resistance. So it's acting as resistance right now. And we're watching for this for an upside breakout. I know that the inventories are getting low and then that we're basically at an inflection point for copper where we're going to be running deficits. We're going to eat through inventory still. Now, the weird thing is we entered this pattern from the top side down. So if there is a slowdown in the market, we could dive down like this before breaking higher. It is a possibility. The yield curve's inverted, are seeing weakness in other sectors. So it's going to be a fight between the deficits and a potential market slowdown. That's going to be the fight. COPX, we're heading higher. There's been a little bit of positioning in COPX to the upside, but again, it's not a huge update, 0.11%. Lithium, this still looks pretty weak to me that we could head lower in lithium. Again, when I look at this, this is a flag pattern where we could go to the downside. Looking at REMX, it's another one that looks like it wants to kind of barf over. We've got big selling pressure move and not much upside. So it still looks like it wants to go lower in the short term. S&P 500 getting a little bit of selling pressure too. That is a bearish engulfing that showed up today. Let's see if we get follow through to the downside. Could see further selling pressure. And NASDAQ, we have a bigger bearish engulfing candlestick And again, that generally marks tops, and these things start to pop up. One here now. Now, it doesn't mean that that's going to immediately occur. It could immediately occur. Sometimes you might get a little small update or two, and then it rips to the downside. Just giving you an example that it doesn't have to go down immediately the next trading day. KRE, this one still looks good. Looks like it wants to go higher. Not much selling pressure, and there's big buying pressure with a gigantic bearish and bullish engulfing. That still looks good. Emerging markets is still holding on. It likes the weaker dollar, weaker yields. XHB, it's got a bearish engulfing, which looks like it could potentially head lower, just like the overall markets. Moo, a little bit of selling pressure, but above support, still looks okay. Iron ore, a little bit of selling pressure, but we're just moving sideways. It's consolidating. We've got nickel moving sideways. But that looks good to me. Like it wants to maybe head higher. If we get an overall market sell-off, it'll probably not go higher, but looks like it's trying to base or bottom out. Aluminum down 0.7%, and we're right up against support time, and that support line is kind of hypothetical. You also have support going this way. There's a lot of support going through here, so we're right at support. Baltic Dry Index up 3.45%. Pretty nice day there. Good. You've got Newcastle coal futures. This is definitely looking like a potential bottom eventually. And eventually we'll work our way on up. We've got BTC up 2.2%. This thing's been ripping it. I'm sure it's sucking in a bunch of capital. We do have that's a bearish cloud cover here, and that still can be activated. But generally what you see is you see a large down move like this day there. Then you see these small up moves inside of it almost. So a lot of the times this can work its way on lower. So we'll see. We'll see if there's some selling pressure still left in this thing. Ethereum's still working its way on up. Momentum to the upside looks pretty good. And then SMCI have a little bit of a bearish candlestick. We call it dark cloud cover, where this could work its way lower. Generally, you get like a hit on the head, which is that guy there. That's your bearish engulfing. Kind of squeezed up a little bit, shot up a little bit higher into a bearish cloud cover, which we could see this potentially peak and start to roll over. Again, I'm not timing this. I'm not shorting anything, but generally when you get these big consolidation areas, and then if you even zoom out more, you get kind of a big move where this started in 2009. This was your bottom of the cycle. You come on up, you consolidate some, break it, consolidate again, break it, and you run. And this run is probably close to being, I would say, done. Your ideal entry point, for my opinion, is here. Then you draw it across would be here. Draw it across and would be here. Those are your three ideal entry points, and that's your big move to the upside. I would not be buying it up here. No way. It's not a good risk reward opportunity. Then when things start to get, when they age, you'll start seeing these big bearish engulfings and bearish cloud covers and all that stuff start to show up. You can also see that when looking at NVIDIA, they just did a huge bearish engulfing today. This is generally where things start to peak out at. That's what we've got today. Now, is it 100% in the bag that this is the ultimate peak? No, not necessarily, but this is the beginning stages of a potential turn. It can turn ugly very quick sometimes, or you might get a pullback and then like a double top or something like that. Or it can do something called a Batman pattern, where it sells off like this. You get like that, and then get one last kind of upward move. This can be a little bit higher the way I've drawn it. It could also be uh, like this, maybe, or even a double top. That's more in line with where we are today. So again, let's just watch it. Let's see what occurs. And I'm interested in watching all of this. And again, guys, these other sectors are going to have an impact on money flows, and it's another way to gauge sentiment too. It could have an impact on uranium. It could have an impact on other markets that we're looking at, because when this starts to go down, people could get scared. They could change the sentiment where it's very bullish to not nearly as bullish, or even reverses all the way where there's a lot of selling pressure. So, me looking at this, I mean, it looks like we are trying to put in top here, kind of my feel. But again, wait and see. We'll see what occurs next week, and how much selling pressure, if it does show up, how much it occurs. So that's what I've got for today. Thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. And we'll catch you next time. This is Finding Value.